In this video, I'm going to show you how to develop trading system portfolio. It's an introduction to trading system portfolio design. I have portfolios that I use. It includes a long list of systems. So once you have your strategies, how do they work together? Which ones do you pick? Here is an example of a large portfolio, 200K portfolio, 40 strategies. You also have micro portfolios of 27 micro strategies, and you see there's different strategies selected in each one of these. And I want to show you a basic two-system portfolio. How do you do this with a smaller number of strategies? How do you customize this portfolio calculator? So I'm going to show you how to do that. First of all, you would want to save this as a different file. So I'm going to do that now. I'm going to go File, Save It As. You can download this portfolio calculator from capstonetradingsystems.com by going to the calculator. You click on calculator. After you go to capstonetradingsystems.com, you can download the latest spreadsheet. Let me refresh this page. It's updated through July the 21st, which is yesterday. So you can download this very portfolio calculator that you're looking at now. And then if you want to customize this portfolio calculator, you can do that. I'm going to show you how. I'm going to do a File, Save As. So you go to File, and then you do a Save As. And then you would say, I want to say Scratch to, because we're going to do two strategy portfolio. Just a very, very basic setup. And then what you're going to do is you're going to expand this, and you're going to select the systems that you want. First of all, let's just delete this, and you're going to get a bunch of NAs. And so what you want to do is you want to come in here, and you want to highlight this top cell right here, and you want to scroll all the way down to the bottom and delete. You just have to delete each one of these sections separately. So delete that, delete that, delete that. These have formulas in them, so the formulas won't work once you do this for the drop-down menu, but you don't need that. You saved it as a scratch. You can go back and download it again if you make a mistake. So you highlight each of these sections and you delete all the NAs. And that's the NASDAQ, and then you have the S&P as last. And so you delete all these, and then the NAs will go away in the rest of the calculator. So this is combined trading system analysis. And so let's take a look at some of the longer term strategies I've had for a long time. We'll select one trend strategy and one counter trend strategy. So a long term trend strategy is Cobra 3 E-mini S&P with a $600 profit target. You see that going back, the worst case drawdown is 85.50. And so let's select another strategy, SR Counter Trend 2. Let's look at it separately. Let's look at SR Counter Trend 2 separately, and you can see it. SR Counter Trend 2. And you see SR Counter Trend 2. It has a 72.50 drawdown, and it's in a 51.50 drawdown. So you have, what you have here is you have a trend strategy and a counter trend strategy, and one is at an equity peak and one is in a drawdown. So that is an ideal setup, is to select a trend and a counter trend, one in an equity peak and one in a drawdown. Their combined max drawdown is 67.12.50. So the combined drawdown is less than the sum of the whole because they work differently, and when one is losing, the other one is being profitable, historically speaking, going back to 2008. Now we can take a look at the performance summary and see what that looks like. So you see it would have been up 9,000 this year. It has losing years. Any individual system can have a 1 to 2 year drawdown. It can have losing years, and two systems also is not very many strategies. You can have long periods of drawdown. That could be a couple of years right here, another year here, less than a year there, but it's at equity peaks. When it's at this line, it's at equity peaks. So more strategies, the more strategy you have, the more diversity you have, typically the quicker these cycles happen. They're quicker. You can look at some of the other portfolios and you see more cyclical, quicker cycles with more strategies. Now, the less strategies you have, then the longer the drawdown. That's just the way it is when you have unoptimized real-world trading systems. The equity curves are not perfect in any individual system. There's no way to make a perfect single system. And so you have this portfolio set up now of 2 strategies, Cobra 3 E-mini S&P, SR counter trend 2, E-mini S&P. What happens? Let's test another counter trend strategy. Let's get rid of this one and let's just go to 0 so there's no strategies. And let's take a look at Cobra CT3 ES. It's an old strategy. We updated it in 2021 to use the non.D symbol and to remove limit band and to add limit band checks to it. And so it has a 45.8750 drawdown. It's in a 16.8750 drawdown. And so it's in a drawdown, a little bit of a drawdown. It has a lower worst case drawdown than SR counter trend 2. What happens if we combine it with Cobra 3 $600 profit target? You have 42.1250. So you get a little bit better setup here. Maybe not. It doesn't trade as much, maybe, but you can see the annual profits pretty consistent. Up 13 would have been up 13K this year. 15K was 2015. Pretty good for trading 2 strategies on the on just 2 E-minis. Getting $2,000 or $3,000 a year or $5,000 a year out of one E-mini is really good. It's pretty hard to get more than that without optimizing it or having a a very short time period that you're looking at. But if you look at a long time period and you're not optimizing it, $2,000 or $3,000 or $4,000 a year on per E-mini is a good setup. And so the best way to get better returns is to combine strategies so you can reduce drawdowns, have diversity, and this is one way to do that. And like I said, I recommend more strategies, and now that the micros are available, you have that option to trade more strategies if you have less capital. The amount of capital required is basically the day trade margin requirement, which is 6,050 plus the max drawdown. So some brokers have lower margins. Sometimes they get rid of day trade margins during highly volatile time periods. Sometimes it pays not to trade during highly volatile time periods, and so you could bias your strategies also not to trade during high volatility periods, so you avoid any spikes in margin requirements. So that is a quick video on how to download the portfolio calculator from CapstoneTradingSystems.com. Here's our home page. Go to calculator, download this Excel spreadsheet, save it as something else, and then delete all of those formulas in the first row, or not the first row, but this column right here under contracts. You just delete all those formulas. Then you can customize it as much as you want. Use some of our existing portfolios as well to compare it to. I want to show you that now. So here's an example of a 40 strategy portfolio we talked about. Let's look at the equity curve and drawdown curve. I typically like to look at the drawdown curve, and you see that the drawdowns have shorter time periods. It's more cyclical. This is ideal to have quick rebounds. You need more strategies, more diversity, and so that is what we like to see in the drawdown curve. I look at that more than the equity curve. And you also have the micros. For the micro portfolio calculator, we calculate 10% of the E-minis in the gold and the 1/10 of the crude instead of the micro values, because there are no continuous contracts for gold and crude oil with not enough data. So use 10%. You'll probably not get 10% when you trade the micros, maybe 5 to 7% when you trade the micros of what you see on this, but it's still in my opinion, a better way to trade a smaller account is to trade micros on more strategies than to just trade 2 strategies. That is the introduction to developing algorithmic trading systems portfolios.